CPI inflation is out in hours. Will this be the catalyst which pushes Bitcoin past $25,000? Or will it be the move that sends us crashing back down and giving us a reality check? We've got a huge CPI reading out in just hours. Tomorrow morning, we're expecting the CPI report. We're going to break down the expectations, what the market could expect, and what it means for Jerome Powell's next FOMC meeting, whether we're going to get a rate hike, whether we're going to get a surprise pause, which the market has started to pricing, all that and a lot more. So if you're enjoying this 9% pump on Bitcoin, make sure you smash up the likes. Check out the link in the description to BINANCE if you're going to trade into these moves and make some of the amazing returns we're seeing here in this green market. Then check out that link in the description. Guys, if you've not watched my videos from earlier, you definitely want to check those out to get some context around what is going on. What has Biden just done? What have the regulators just done? Why is there such a huge flippening? I have covered that all off, and you're seeing Bitcoin have a huge move here today. But this video is brought to give you the expectations of CPI, so let's get straight into that. The forecast for CPI headline inflation is expected to rise 0.4% month on month versus 0.5% in January. If you look at the core CPI, that's 0.4% versus 0.4%. Headline inflation, 6% we're expecting versus 6.4%, and for core CPI 5.5 versus 5.6. Take a screenshot of that. We will be going for it live tomorrow, so make sure you join us. Make sure you hit the subscribe button with that bell notification. But more importantly, what does this mean? Because we need to understand that up until now, we've been waiting for this curve to come down. And why have we been waiting for this? We've been waiting for this to come down to that 2% target range so Jerome Powell can decide to pivot on his interest rate hike, right? That's the reason, because we want him to stop hoovering money out of the economy and then eventually to decide at some point to start printing again, which means start cutting your rate hikes again and then become looser and looser monetary policy. Now, what we've since had over the weekend is the breaking of the US banking system. Again, go watch my video from earlier today where I explain all of that. And that has led the market to have a huge flip-flop. 84% of the market is pricing in 25 basis points. About 15 to 20% at the moment is pricing in a pause, an unexpected pause. This is changing every minute, guys, so by the time you refresh, it will change. But the market is starting to price in this concept of a pause. If you take a look at the CME Fed Watch tool as well, and I've clicked on December to see what happens by the end of this year, the market majoritatively is pricing in between 3.75 and 4.25. So they're pricing in rate cuts before the end of the year. This is a huge flip, because we know that Jerome Powell and the Fed have said we're not getting no rate cuts in 2023. This is a major flip, and it's not happening because inflation is under control. No. It's happening because they broke the banking sector, and you've seen the collapses of SVB and Silvergate and Signature Bank as well. So with that said, what are the different scenarios at play? If we play out the different scenarios, let's say we get a crazy CPI reading tomorrow at like 7%, right? Which would be ridiculous. If we got a crazy 7% read tomorrow on inflation, then Jerome Powell is in a real tricky situation. He's going to have high unemployment, high inflation, right? So high employment, high inflation, but he can't increase rate hikes. He can't do 50 basis points. Weeks ago, people were starting to price, just last week in fact, people were pricing in 50 basis points because the labor market was high, inflation weren't coming down enough, and Jerome Powell was thinking, I need to get more aggressive again. I can't do 25 basis points. Now overnight, he's stuck because he's breaking the banking system, so he's going to be forced to pause. So if inflation comes in really hot tomorrow, I would not want to be Jerome Powell, and the markets will be really volatile and really confused. Now, if we see inflation in line around 6, 6.1, those kinds of areas, the market will continue to be happy, in my opinion, because it still gives us precedent that Jerome Powell's probably going to do 25 basis points or maybe even a surprise pause as well. If we get lower than that 6%, if we can get lower than 6% tomorrow, so which basically saying inflation is under control, I'm thinking that bumps up the probability that we could get that pause. Jerome Powell would like to do nothing more than pause right now. And if you can have inflation coming down as well, below the 6%, let's say it comes in at 5.9 or 5.8, he's got a nice excuse to say, oh, look, inflation's coming down, we're on top of it, we're going to have a pause, see how we get on. But really, he'll just be pausing to protect the banking sector because Biden's going to have a little whisper in his ear. Let's also take a look at what others are expecting. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days if you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. Goldman Sachs sit on the side of saying that no, at the FOMC meeting on March the 2nd, we think he might have to miss having a rate hike. He's going to have to pause. On the bottom side of things, you look at JP Morgan. If they indeed have used the right tool to address financial contagion risks, then they can also use the right tool to continue to address inflation. Higher interest rates. So we continue to look for a 25 basis point rate hike. So this is not a foregone conclusion, guys. It's not a foregone conclusion that it's 25, nor is it a foregone conclusion that we're going to get a pause. We need to look at the data that comes out. If you jump onto my Twitter, which you should be following, guys, you will see that I did post out a list of all the experts. I also posted a nice GIF here as well. USA politicians and Fed, you beauties. Yep, they're giving us a lovely pump, guys. Smash up the likes if you're enjoying that pump, thanks to the US officials. So, CPI forecast for tomorrow, you can see all the key banks here kind of coming in at around 6 and 6.1. The median is coming out at 6%. So we're expecting it to come in at target tomorrow. But the key thing we're going to have to look at is this. Does the CPI reading tomorrow affect what people are pricing in the markets? If we get a weak CPI figure showing CPI is cooling off, expect more people to price in a pause, which will give us a rally. Anything the other side, more people were pricing 25 basis points. We're expecting 25 basis points anyway. The beautiful thing that's just happened over the weekend, through the Fed initiating the fact that they're going to back the deposits of this bank, a $25 billion liquidity injection into the market, that's what it is. Right? Whatever they want to call it, whether they want to call it they don't want to call it a bailout, whether they want to call it something else or something else, the reality is it's liquidity in the market. And Bitcoin strives on liquidity. When there's good liquidity in the markets tend to be risk on, good for Bitcoin, bad for dollar index, bad for the US 10-year, right? Look at the dollar index, not having a good time. Look at the US 10-year, having a bad time. Look at the dollar index, also having a bad time. Head on over to traditional markets, Nasdaq rallying 1.3%, S&P 0.6 and the Dow Jones 0.5. The Dow Jones is not going to move as much as the Nasdaq, right? We're correlated with that Nasdaq, the risky part of markets, risk on. That is when Bitcoin starts to move. Now, with all this euphoria, we've got to stay level-headed. We've got to look at what the key levels are. And right now we're here on Bitcoin. You can see it's mounting attack at this 24,000 level, sitting at 24,200 right now. It's got to maintain that level and build some support to push through 25. That 25 level for me is going to be the key level. Until we take that weekly EMA ribbon back, there's still going to be a little bit of nerves, right? Just to see if the bears are still around. But overall, from a fundamental perspective, this is a major shift. The Fed have broke something, and therefore they need to seriously address whether they want to continue to increase rate hikes. Now, what's the risk? The risk is that Jerome Powell comes out and ignores all the market and does 50 basis points. Banks are going to struggle. There'll be contagion risks. Markets are going to dump. Do we think he's really going to do that right now? Very unlikely. And that is one of the reasons we're starting to see the market move. Guys, let me know, what are you doing in this market? What are you expecting for CPI? We will be covering it off tomorrow together to see how the markets move. Definitely try not to chase green candles. But this could be the last time we ever see 25K.